to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to our frivolities. Happy Q4 2024. So we're into the final quarter, 2023, beg your pardon. Final quarter of 2023. I suppose we should probably keep an eye out for our first 2-week study. Maybe we'll do that in the after party. I might be curious to see how that plays out. I like using these sites. Stockcharts.com. These guys are great guys. Good old John Murphy. John Murphy's a great guy. So anyway, we'll sort of be looking at the data. I'll probably do this in the after party. This is a part of our level 3 education program later on after we introduce you to options, sector rotation. And actually, Zach, who is our level 4 instructor, he uses this really, really well to time his option spread trades. Totally sick. In fact, actually, we had class on Saturday, and it was totally awesome. Doing debit or net debit spreads. Anyway, buying a call and then writing a further out call, or buying a put and writing out a further out put. And actually, we were kicking around the idea of doing spreads in the oil industry. I think I had told you guys recently that these oil stocks were just looking like an absolute train wreck. We had like Halliburton put in a most beautiful outside downside key reversal, beautiful technical failures, and you can see that thing is just puking out nicely. Actually, I thought I was going to show you this yesterday, but actually I got distracted because of other platform goodies that I was showing you. But and I don't even know where the heck I have it. I always do this. But here it is here. This was just for the month of September. Pretty good numbers. Total of 27 key reversals fired. Some of them are a bit of an anomaly, so we're trying to figure out why those fired. But you can see how many of them are working or in position and in profits. Some already had their profit objectives hit 1.5 to 1s. And of the 27 signals that fired, 10 winners outright. 4 that actually didn't produce any trades, and only 4 losers out of 27 signals. That's pretty damn good odds. And as you can see, a lot of them are just open and working. And I think Halliburton is in there. Yeah, there's Halliburton right there. So just working away. I wouldn't be surprised if that Halliburton actually does have its profit objective hit pretty soon. I mean, that's just the most beautiful top there ever. So fantastic to see. System is just operating on full capacity, just totally kicking it. I think I told you the algorithm actually was bullish of Bitcoin. We don't really like talking about these signals as they're happening because it is a paid for service, and we don't like people just being bad karma, just either stealing our information and remarketing it, or just taking the trades and saying, hey, I'll just go off of this guy when he publicly talks. So I don't really talk about the signals in real time, but you can see after the fact here, this algo buy. And it's interesting that the algo did right out of the gate have to take some heat, and then a really big fat W came in on really nice bullish momentum divergences with Willie Stupid. So this is what I'd call the Tangonator setup in our trading plan, which is what I'm trying to trade actually in the crude pits right now. And then we had a bot setup. It was really wide and really ugly, but you can see, I think we were talking about this through yesterday's broadcast. Kind of messy. It's interesting how it did run up to move stop to scratch, but it never did come back to the scratch level, and then just launched itself all the way up. And it actually did hit the bot profit objective. Have a big question mark. Are we going to hit this AB equals CD? Well, I don't think we can put question mark there. Now I think we got to put a big fat, yep, nailed it. So, I mean, absolutely perfect example of a bought profit objective. And look how the market's just melting away following that event. So, algorithm's totally kicking it. And actually, I think you just saw there a moment ago. We started off with, okay, what was the September data? And then I said to the boys last night, all right, let's go back since the beginning of the year. And let's do all the signals since the beginning of the year. And you can see all going back all the way to December. So you want to know what Brian's going to be doing with his free time over the next little while? That's what Brian's going to be doing. Oh boy, what a lot of work. Well, that's going back 2022. So I've got quite a bit of work ahead of me there. But nonetheless, I can't stress enough how incredibly powerful this information is. And, the team was sort of pointing out that, it's one thing to sit there and go, this stuff is awesome, man. You got to subscribe. This will change your life. It's quite another to actually show the data. And Julian went through, and actually as well, Josh did too, which was very impressive. I don't know whether I can show you that or not. Kind of, it's an odd day today. It's a little bit scatterbrainy. It's the first day of the new quarter, so I want to take things a little bit slow. I suppose we can talk about potential day trade setups. I didn't have anything come in. Something almost came in here into the European close, but as soon as I start these videos, I don't want to be thinking about putting on a new trade. So I haven't really done anything here today. And of course, it's kind of funny dealing with good old Michael Patak and his firm Top Step. I'm sort of doing a demo combine just to prove that I can still do this stuff. So with them, so I'm kind of wrestling with them a little bit on platforms. Not overly impressed with the platform that I initially got started with. Anyway, I wanted to show you Josh. Yeah, here we go. So, Josh and Julian, they've been working incredibly hard at putting all of these statistical measures together and doing the breadth. And I think they've done a fantastic job. And I think they clearly demonstrate the value in the breadth indicator. And now what we need to do is we need to do the same thing for the key reversals. So just, a really good working example of a key reversal signal. I mean, just as plain as day, the most beautiful outside downside key reversal there. And of course, you can see the trade's working quite nicely. So very typical key reversal trade. Also did have quite a few others, not necessarily key reversal, but this is like the biggest oil stock that people like Peter Fink and stuff own. And not quite a key reversal, but a bearish engulfing bar, pretty close to key reversal, just not quite. But you can see basically the same kind of performance that we saw out of out of Halliburton there, and that doesn't surprise me. You're probably going to see this all over the oil sector. So anyway, we'll see how that goes. I suppose it's Monday. It's the first day of the new quarter, so usually the best thing to do is sort of let the market breathe the first week or two of the new quarter. Just try and figure out where the fund managers are going to be putting money. Right now, it sure looks to me like fund managers are going to be taking their money out of the oil business. So it'll be interesting to see how that goes. I do like to, demonstrate our best practices and all that kind of fun talk. And I think I even told you on the Friday show that wasn't overly impressed with my performance. Also, too, just got this sort of new trade tracking, logging spreadsheets and stuff up and running. So I had to do a lot of sort of introspection through the weekend. And it is month end, quarter end. So that's a good opportunity to go through your actual performance recently. Actually, being the quarter end, it's probably a good time to do report cards, all you level 3ers. I should probably fill out my report card. I was very impressed with all the level 3ers filling out their report cards. I did come up with some pretty interesting conclusions of the data that I had. This was, the end of sort of the first official month of sort of getting back into the swing of, really day trading in earnest. And so actually I had I like what I'm doing journal wise, and anybody who's sort of looking for sort of best practices journaling stuff. I mean, this is what you got to do every bloody day. And so I'm actually quite pleased to see that. A lot of didn't really have anything set up per se for me this morning, didn't really have any crisp levels. So it was all sort of paper trading. And paper trading at poor levels, getting stopped out right, left, and center. So it's probably good that I didn't take any real trades. Sort of routine. I think you've seen this. I do think it's a good idea to track how you're doing, sleep wise, diet, exercise, how your computer equipment is, software, all that. What time do you get up in the morning? Are you setting yourself up for success? Of course, I like to look at what the news headlines are overnight, and then what is the econs that we should expect through the day. And then I do like to, through the weekend, draw up sort of daily, weekly levels. That's maybe what we can probably look at here today. If I was looking at trading crude oil right now, you can see there is the V top. And of course, remember, oil stocks lead stocks lead everything. So I showed you there just a few minutes ago, Halliburton, Conoco, all those kind of names breaking down. So really, it shouldn't surprise us that this crude oil chart does not look very happy right now. Some basic observations I think we can take away from this. First and foremost, looks like we had bear divs actually confirm here on MACD, and really stupid. So on a daily basis, you can also see we have volume divergence on this push to new highs. So we're a million miles above value. My hunch is this: they probably got to bring this market back to like a Wyckoff check of that 85 level. You can also see that on the weekly chart up above value here, and that's just basically a big fat doji there. That huge spike up, and then market collapsed into the end of the week there, and the selling is continuing here. Also, you can see on the weekly chart, 13 EMA is going to line up with that previous breakout level, which is sort of that. It looks to me like the market would really like to come back to that 84 area, somewhere in that area, to try and find some support. And then, like I said there a moment ago, this is the first 2 weeks of the quarter. So we probably want to keep an eye on how these fund managers are allocating new capital. I have a feeling it's not going into oil, which is probably a good thing, because we really don't need this oil price this high. It's not really good for the economy, and a really good sort of testament to that. So if we go over and look at the Dow theory, transports versus the industrials, you can see we had kind of cautioned you about this, and this is great learning material for everybody. When the industrials were trying to work their way higher, but you had the transports continue to break lower, that was a major, major warning sign. And interestingly enough, you can see how the industrials are playing catch up now to the way the transports are crapped out. So we can't really get overly bullish about the stock market and about the growth prospects for the economy until these transports bottom out here. Also, too, another probably note about rising energy prices and the inflationary implications. You can see right across the board, not only consumers and mortgage rates, they are ticking higher, which is, I think, to all intents and purposes, that housing market bubble has popped. It's going to be really interesting to see how this real estate disaster plays out here in Canada. I mean, it's completely ridiculous. And of course, I go on and on and on about how just almost like morally irreprehensible, if that is a word, the behavior of our politicians has been, and how they've basically kowtowed to the banking class elite to do this whole great reset, flood the economy with new money, and hyperinflate their way so they can go and borrow more and more and more money and go into more debt. and the whole damn thing just continues. But clearly, interest rate perspective, and I have been warning people about this, there is no top in interest rates here yet at all. And for our inflation deflation gauge, we don't show any signs of that stopping yet either. We are coming up into an interesting um, 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 harmonic objective, big AB equals CD. So we will see how this plays out, but just keep in mind that sometimes these AB equals CDs can turn into alt AB equals CDs. I don't know whether we want to draw it off of this low. We might even draw it off of that low, and open to interpretation. Actually, here, let's flip this around, make it easy. So just the point being with this rant is I don't really see any finish to this inflation problem just yet. So we go A, B, C, D, and I just did their eyeball. You saw that I took it off of the lowest low. So that matter, you can see what I'm talking about there. But we have to understand that AB equals CDs can sometimes turn into alt AB equals CDs. No idea where the hell the top on this thing is. I suppose we could probably also do things like fog and bombs. Let's just eyeball this up so that we can get rid of that line. So fog and bombs might go off of that low there, back up to that high there, and then up to there. Boom. All right. So interesting. We should have a pretty big fight here coming up here in the not too distant future. But as it stands right now, there is nothing here as of yet. So interest rates heading higher, inflationary pressures heading higher. Interesting, the gold and silver ratio. We haven't talked too much about that recently. It's been kind of going sideways for quite a while here, but you can see structurally it's putting in a base here, and this actually would be bullish of the sentiment in the marketplace where if the gold silver ratio moves in gold's favor, it means that the economy is not doing so hot and people are running into gold to get the hell out of risk assets. If this is moving down, it means it's moving in silver's favor and the economy is doing relatively well. So it is interesting. We haven't really talked too much about the gold silver ratio recently, but you can see it's starting to put in multiple W's here. That's usually not a good sign. And I suppose if we go over and look, remember that Kawasaki guy? He was all uber bullish of silver, but I don't know. Silver's been getting its head handed to. It'd be interesting just to take a quick view while we're here at the silver. Yeah, down 4.5% on the day. Wow. That's a pretty big drop, boys and girls. So this is why the gold and silver ratio is getting crushed. If we look at that weekly chart, of course, now we can start doing things like fog and bombs to the downside. So, not a big surprise. 2.618 is going to be a test of this key support level in here. 4669 would be a test of this key support level all the way down here. And I hate to tell you, who can help me? Maybe, hey, we got 14, 15 people watching. Hey, Meg's here. I was wondering if you guys were still paying attention. What are we supposed to think if we ever see the market smiling at us? Uh-oh. So that can't be a good sign. Anyway, these silver guys, they are notorious. When I was a commodities broker, we used to joke about how the silver people literally stole money. There's a fine line between the silver commodities trader and the mafia. And what's funny is that the Montreal Options Exchange is actually run by the Canadian mafia. But shh, don't tell anybody that, or else you get your head handed to you. So anyway, this is one smile, and then you got another bigger smile, right? Maybe we'll make this smile yellow. But I'll tell you, man, that's a lot of smiling at you. So be damn careful, all you silver bugs. That looks like that's got trouble written all over it. And you can see why the gold silver ratio is moving in gold's favor. Gold isn't really moving that much, but silver's getting smoked here. So anyway, interesting commentary there for your Monday morning. So inflationary pressure is still very strong. Looks like interest rates are moving higher across the board, including the housing market, that long mortgage rate. The Dow theory ratio, relationship between transports and industrials still working lower. Maybe the transports might actually start bottoming out here. That's the yellow. And if that's the case, then that might set up a divergence, which actually is saying that the industrials probably should bottom in the not too distant future. So anyway, we'll keep an eye out for that. Looking at the broader market, it was interesting. Yesterday, we had talked quite extensively about things like Bitcoin had our algorithm had turned back bullish here after going, bearish. I mean, this is an algo trader's life. So if you fancy yourself an algo trader, this is probably a really good demonstration, if nothing else, a good public service announcement of how if you get into a ranging market, holy crap, algo trading can rip you apart. And you just have to keep a level head, and you might take a small loss, take a small gain, take a small loss, take a small gain, but you're just going back and forth, back and forth. And remember, the computer doesn't care. The computer is like sort of indifferent. They just take the damn trades, no emotions. So it was interesting. Algo went back bullish here. We went through a bit of chop and then a huge bull run. I guess on the news of the Ethereum ETF approval, and probably Bitcoin ETF approval will be shortly shortcoming, or whatever the term is. And interesting how Bitcoin ran up. It tagged the AB equals CD profit objective of this bot. If you were bot trading, you should have your open order just sitting there to liquidate at that level. And then the market just quickly backed off following that. There's a little bit of a warning sign for all you Bitcoin bulls. Notice that this move up here was on almost no volume at all. So do we need to spend some time and just backfill and come back down into where a lot of people have bought and sold Bitcoins? Yeah, it wouldn't surprise me. If we look at sort of the broader picture, is there anything that's really jumping out at me today? And I'll tell you, the one thing that's jumping out at me is look at this damn US dollar go. Of course, I have been a US dollar bull since the what was it called? The insurgency. They're so funny, all the Democrats and crap. They came up with these incredible names for the whole Trump thing there a year or two ago, and actually, I guess it's a couple of years ago now, question is, where the hell was that? Was it way over here? Can't even see the date on this. All right, thanks, Chris. So here was the Jupiter Saturn conjunct with Pluto thrown in there as well. I think this was a historical pivot for the US dollar. And of course, this was the insurrection. That's what it was. Thank you, Connor. The insurrection. Give me a fucking break. And it's just such a sad commentary on politics. Stupid fucking humans. But anyway, point of the matter here is if we zoom out, you tell me, is it relevant to keep an eye on these Jupiter-Saturn cross events? Holy crap. Geez, I can't even see it on a 4-hour. Maybe let's go out to like, I don't know, 6-hour. Maybe we can see it for you. So there was the Jupiter-Saturn cross. This was the big historical event. Cats and dogs living together. Most beautiful technical bottom. Look at that W. I had been conjecturing that the US dollar, we should be heading into a greed cycle since 2018. I think the market had to wait for the Jupiter Saturn cross to happen. And really all this is just fluff in here. And, it's so much fluff, you can't even see the damn chart. But I get the feeling we're heading back up here in earnest. It'll be interesting to see how much of this sell-off we take back here. If we zoom back in on the short term, my apologies for the messy chart. But you can see here we are here climbing the wall of worry, as they say. If I understand correctly, there is a big lunar eclipse. I don't know whether it's lunar or solar eclipse, but it's supposed to happen here in October. And I wouldn't be surprised if this is some sort of pivot for this fear proxy. Probably also too, this is a I think a good example of that there's this ICT guy seems to be super popular, and his idea of fair value gaps. Well, you can use that kind of concept even on things like higher time frame charts, where you can see there's lots of back and forth here, lots of trading, and there's lots of back and forth here, lots of trading, but there's this little window here where the market just went vroom, straight down. So if you were looking for a window to look for the US dollar to sort of exhaust itself, my hunch is it's probably into that window there. So does that mean we could still work our way a little bit higher here over the near term? And I think the Fed is expected to raise interest rates like one more time into November. Maybe that's what that event will be. And then that will be sort of the end of the recent US dollar rally. But I will say, just waking up this morning, looking at the price chart, I was quite surprised at how strong that US dollar index is here in the short term. And you can see they even broke it out to new highs here. So very, very strong. And, what this really means is all these international currencies are really, really weak. So I don't know whether it's necessarily that the United States of America is so great and so wonderful. It's just everywhere else is just crap. Of course, China and that fucking joke of a bubble of a mafioso economy continues to unwind. So Asia's under a lot of pressure. Australia as sort of the supermarket for commodities of Asia. It's just there's no bottom there anywhere in sight. The commodity demand themselves, nothing here at all. Canada as a commodity proxy, and of course the oil market's now starting to break, so we should probably see the Canadian dollar break pretty hard here. And even the Swiss franc, beloved Swiss franc, go bury your head in the sand, buy a bunch of gold, and they're even getting ripped apart here. So I think it's really more a function of the world economy. Currencies are crap, and everybody's just running into the US dollar as the Fed has explicitly said they want their short-term money policy to be restrictive, and the global economy is contracting now. It is restricting. And so as a result, this is exactly what you should see. Interesting to see stocks. The NASDAQ is sort of fighting with holding on to gains here. It's probably the only part of the market that's happy. It was interesting how recently we had the Russell 2000 sort of perk up a bit. But you can see sort of real-time reporting. NASDAQ is trying desperately to hold on to its gains here. And I suppose with the oil market rolling over, and you've heard me talk about how tech stocks and oil move in opposites. So it does kind of make sense why these guys are a bit perkier here. And if I'm not mistaken, I think it's primarily on things like the NVIDIA is catching a bid here this morning. And notice AMD even had a really nice counter trend rally there. So tech stocks are trying to push higher here. And I suppose if you do have oil coming off that should be supportive of tech. So certainly don't have anything to get too uberly bullish about in the stock market. I will say, though, that, it is now October. And of course, buy when it snows, sell when it goes. It shouldn't surprise us that the algo is now officially oversold in the fast. And what would sort of paint the picture that this stock market is ready to bottom seriously. Thank you, Koss. 14th of October is that solar eclipse. It probably happens right around that October 14th. But I've talked to you guys at length about this. Notice the country funds are now completely oversold in the short term, approaching oversold in the medium term. Not quite there yet. S&P 500 is down. And of course, you can see the algo. It's not happy at all right now whatsoever. If anything, what we would like to see, I think, is we want to see a period like this, where you see how the algo dips down, then it comes back and even kisses the slow moving average, then comes down, makes a W, and then turns back up. And you notice that from the start of this, that's August 17th, to the actual buy signal, August 28th. Well, that's a good 2-3 weeks. So if something like this happened over the next 2-3 weeks, that would take us through that October celestial event. And my hunch is you're going to see everything in the market completely washed out, and basically your buy when it snows scenario is setting up like a boss. So that's sort of what I see happening here. I suppose just to finish this off, were there any econs or anything that really jumped out at me today? Not really. Japan was down about 1/3%, so I would expect that probably is going to be the case for North America. There's a whole bunch of Fed speakers today, so I wouldn't be surprised if there's a bunch of chop around that. And as I said, I was hunting setups in crude oil this morning for the Top Step people, and I didn't see anything that got me excited. Was paper trading, just wasting time. The econs themselves coming in relatively benign. I wouldn't necessarily say that they're rip-roaring bullish, but I would say that they're not fall off a cliff bearish. They're kind of just flatlining here. And notice, of course, and I've said this repeatedly, stay the hell away from Canada. Canada is an absolute shit show right now. If anything, we need a crash to happen in this economy just to bring the economy back to, all right, well, actually, this place is back to investable. Right now, it's just completely not investable, and it doesn't surprise me. Who the hell would move their manufacturing to Canada? This place is a nightmare right now. And the poor immigrants that have come here, I think half of them are actually going to be living on the streets right now, because there's no way in hell an immigrant can come to a country and just shill out $1 million for a brand new house. I mean, this is ridiculous. Anyway, yeah, don't get me started on how the shit show of Canada. So the point here is we had few econs today. What we really had a lot of today was a lot of Fed speakers. So because of all the Fed speakers, look at, we got Chair Powell here. He's probably in the middle of his speech right now. You've got Hawker, Barr, William. I mean, Meiser later on in this afternoon. This is going to be just chop central. And like I said, with regard specifically to the econs, PMIs are coming in below 50, which does technically mean contraction, but you can see they're coming in slightly better than expected. So as a result, it's sort of like, yeah, it's not great, but it's not terrible either. You can see interesting manufacturing for the US, the employment picture. This is the one part of the market you probably want to see weakness, because the Fedsters want to see weakness in the employment sector. And it's the one part of this report that's actually coming in as expansionary. Go figure, eh? So there's your backdrop. It's the beginning of the new quarter. Go slowly. In the after party, we'll dig apart what the previous quarter looked like. We'll also maybe look a little bit at some of the system signals. Like I said, the key reversals are just rocking it. There's no reason why we all can't use this kind of information to make a fortune in the market. I think, the key reversals working in the oil market right now are que bella. So it's just slow and steady. Go take it, one day at a time kind of idea, and try not to take any wooden nickels. All right. Remember what your number one job is. We'll see everybody in the after party for some more sort of antics with Brian. Slow and steady wins the race. All the best. And the only thing left Brian said is bye for now.